Unit 5. Money. Recording 5.1.
Yahoo has strengthened its European presence with a €475 million acquisition, that's a $578 million acquisition of Kelku, the French-based online shopping service. The European online retail market is forecast to grow to €107 billion in the next 3 years. The Nikkei 225 average climbed 0.7% to 11,364.99, while the Topix index rose 1.2% to 1,145.95. Banking shares benefited most, with Mizuho jumping 5.6% to 437,000 yen, SMFG rising 4.7% to 752,000 yen, MTFG gaining 7.9% to close at 1,050,000 yen, and UFJ up 4.2% to 646,000 yen.
Recording 5.2.
What are the best ways for a new business to raise money?
Well, I think there are 3 key areas to look at if you're an entrepreneur. The first area is bank debt. The second area is private investors, or in the UK, business angels is their colloquial term. And finally, there's venture capitalists. If you're an entrepreneur starting a business for the first time, then often bank debt is not an area which you're going to find very successful, mainly because if you're a startup business and you're an inexperienced entrepreneur, the banks won't want to lend to high-risk businesses. And if you don't have any trading history, then they are unlikely to provide you with bank debt or with an overdraft. That is, unless you want to provide a personal guarantee to the bank, perhaps putting your house at risk. The second area, if you're a startup business, is private investors or business angels. These are typically wealthy individuals that over their life have saved up a considerable amount of money which they want to invest in high-risk, high-return businesses. So these are individuals that have decided not to invest in the stock market, which is large, lower-risk investments, but to really take up an opportunity to make 10 times their money by investing in startup businesses. And the third area to look at is venture capital. Now, venture capital is only appropriate for entrepreneurs that are looking to raise more than £1 million. If it's less than £1 million, then you need to go down the private investor route. An example of a venture capitalist in the UK is a company called 3i. So if you're an established business looking to raise money, then the bank debt route is probably the most appropriate. If it's under £1 million, then it's private investors, and if it's over £1 million, then it's venture capital.
Recording 5.3.
And how do venture capitalists select the best companies to invest in?
There's no real hard and fast rule here, and it's certainly more of an art than a science. However, there are 3 areas that a venture capitalist will look at. A venture capitalist will look at the market, it will look at the industry, and they will look at the management team. Now, the market is an important area because as an investor, I want to invest in a business which is selling product into a fast-growing market, a large and fast-growing market. Because as an investor, if I invest £1 million, I want to make £5 million as my return. So that means I need to invest in a market that is growing very quickly. And the market, it's important to note, is all about the buyers. So who is going to buy my product? At what price are they going to buy it? The second area is industry. And the industry is all about the sellers. So it's all about the competition. So if you're Renault, you're competing against Volkswagen, BMW, and Mercedes-Benz, for example. So as an entrepreneur starting a business, I need to make sure that I have a lot of competitive advantage. And in many cases, I deal with technology companies. That means I need to have some intellectual property or some patents which protect my technological advantage. So the second area is industry. And the final area, which I think is the most important, is the area of the management team. And management teams are very difficult to assess, but venture capitalists look at three areas. They look at the experience of the management team, i.e. how well do they understand the market and the industry that they're going into. They look at the ability of the management team to execute on their business plan. So if they've said they're going to create a business with revenues of £10 million, as an investor, how much do I trust that view? And finally, which is a very subjective area, is does this individual manager have the personal commitment to deliver on this plan? Are they willing to work 24 hours a day to ensure that my £1 million turns into £5 million?
Recording 5.4.
Can you give us an example of a really good business proposal?
Well, the most exciting business that we've worked with recently has been a spin-out from Oxford University. And as you can imagine, from Oxford University, they have a lot of intellectual property. So they have a lot of competitive advantage. Secondly, this business is focused on developing software for the computer games industry. The computer games industry is a very exciting market. It's been growing very, very strongly over the last few years and will continue to do so with the success of people and games like Lara Croft. Now, the management team was a difficult area because although the management team were very technically strong, they didn't have a lot of management experience. But the investor decided to invest £1 million, and the first thing they did after investing was to hire a commercial director to run the company alongside the two founders with technical backgrounds.
Recording 5.5.
And have you ever missed investing in any big business opportunities?
I think there is one company in particular that I now kick myself about. And this is a company in the market of internet advertising. And I missed out on this mainly because I didn't understand or I couldn't predict the market opportunity. As you know, the internet bubble collapsed very publicly in 2000 and 2001. And this business that I met offered me an opportunity to invest £1 million at a valuation of £5 million. But I decided to turn them down, even though the team was very good, mainly because I couldn't understand how anyone could make any money advertising on the internet. Now, over the last 2 or 3 years, although the media have written a lot of negative things about the internet, you and I and everybody around this table continues to spend more and more time on the internet. And so actually this business's business model started to look very exciting. And last year the business was sold to a US competitor for £160 million. So the numbers are very exciting. I was offered an opportunity to invest and take 20% of the business for £5 million, and it's now been sold 2 years later for £160 million. So I think if I'd have taken up that opportunity, I'd probably be on my yacht down in Monaco right now.